Ladies and gentlemen, boys and girls, children over the age of 18, I'm Ortez, and that's Travis. And today's episode, we're going to go take a deeper dive into what actually is credit and some of the strategies and tips that we have to help you fix it. So go ahead, grab a pen and a piece of paper and your favorite beverage, and we'll be right back to get into it. See you in a second. All right, folks, welcome back. And as promised, we're going to get a deep dive into credit and exactly how does credit work and how to figure it out. So I really wanted to start off, Travis, I'm going to go ahead and take the lead on this. I wanted to show everybody here watching a chart that will hopefully explain how credit is broken down and how it actually is calculated. So if you pay attention to the screen, ladies and gentlemen, you should see a screen share where there's a chart that basically breaks down your FICO score and how they actually calculate it. So let me go ahead and go through it with you real quick. So then that way you get a better idea of how your FICO score is actually calculated, right? So when it comes to your actual FICO score, there are 5 different areas in which they look at in order to basically do this score, right? So first we have your payment history. Then we have the amount owed, which means the amount owed in terms of debt. Next, we have the length of the credit history. Then we have new credit. And then lastly, mixed credit. And if you look at the screen, ladies and gentlemen, it gives a pretty detailed breakdown of what percentage each one of those attributes to your actual score calculation, right? So when it comes to payment history is going to make up 35% of your FICO score. So by you paying your bills on time, that's 35% of your score right there off top. Next, it comes to the amount owed, and that calculates up to 30%. And I kind of like to always remember that number 30% because it really kind of affects like your credit card usage, right? So when it comes to all credit cards that you have, keeping a balance below 30% typically shows like a good standing in regards to your usage of credit. But the amount of debt that you actually owe determines 30% of your actual score. Next, we go to length of credit. That's the next biggest chunk, and that counts to 15% of your credit score. Now, I'm going to go on a little side tangent here when it comes to that. With length of credit, too often do I see folks when they are repairing their credit and things of that nature, the first thing they want to do is close a credit card once they pay it off. Well, that credit card is actually your longest credit history card that you have. So essentially what you're doing is once you close it, you're flushing away that history when in actuality, it's been helping you out all along. So length of history is very important when it comes to that, especially if you have something that you've had for a long time. Closing it might not actually be a good idea when it comes to it, as it attributes to 15% of your credit history, right? And then the last two, they're pretty much even when it comes to what they attribute to your credit score. And that's the new credit as well as the credit mix. So those each account for 10% of your credit score. And basically new credit is what it sounds like. It's the addition of new credit that you bring onto your credit report. And then the credit mix is the variety of credit lines that you have. So let's say, for example, you have a mortgage payment, a car payment, student loan, and then a credit card. Right there, you have a very good mix of credit, which accounts to 10% of your credit score. And that kind of breaks down the actual score in which how FICO determines what your scores are. Now, when it comes to the actual score itself, different bureaus have different algorithms when it comes to actually determining your score. So Equifax, TransUnion, and Experian all have different ways of calculating. Some of them will be like, I think if I'm not mistaken, the Beacon 5. Some of them are FACTA. All in all, in total, there are about 20 different algorithms that they change sporadically when it comes to determining your score. And then the next thing I want to touch base on is that we always talk about this, and folks always say, well, my Credit Karma score is this. Don't get a consumer credit score confused with like a mortgage credit score. Even those scores are different. So you'll get a different score when it comes to credit cards. You'll get a different score when it comes to buying a car. You're going to get a different score when it comes to buying a house. So knowing that there are so many different algorithms, this is one of the things that's so confusing to folks that I just wanted to touch bases on. But the biggest thing is, what does it take to actually basically make your credit score, or those five things that I discussed? So it kind of makes me want to transition into, we're talking about the score. So Travis, I kind of want to jump back to you, and this is the age old question we get asked every day: what score do I need?
Wow. Wow, you gonna put me on the spot like that, huh?
I mean, we get asked that
How,
question so much. I
oh
guess I'll
yeah.
throw that up to you.
Yeah, well, let me give you the answer that no one wants to hear, and that is that there is no single right answer, right? Your score will greatly impact your overall risk, which will greatly impact your interest rate, your cost, your required down payment, all those things that go into your total overall, like let's just call it like a mortgage scorecard. Those things those things can vary drastically. Now, I can tell you that personally, I've written and closed loans for clients with this credit as low as I think 550, 555. Um, those are going to require a lot of work. All right. The magic word in our industry is compensating factors, right? So sometimes your compensating factors are unrealistic down payment. Sometimes the compensating factors are um, a terrible interest rate, right? High risk folks get high risk products, right? So the answer to that question is, I've never successfully written a loan for anyone with a credit score under 550. Now, when we talk about our more traditional products, those become a little more common at 580, even more common at 620. And I always tell people that in order to buy a house in today's market and be competitive, you probably are going to want to have at least a 680. Now, that's not to say that, I mean, I'm currently I have 4 or 5 loans in process with credit scores between 620 and 680. With the popularity of some of the changes that FHA has made to their loans and some of the flexibilities that they've built in, those things are going to start to become more common as the market loosens. However, I always want to implore to people, every point that we get you is an opportunity to have it easier somewhere else in the process, right? The truth of the matter is that most people with a 560 credit score don't have 20% in the bank laying around for a down payment, or else they probably wouldn't have a 560 credit score, right? So what score do you need? There is no single answer. I can tell you that if it starts with the 6, your life is a lot easier, right? So that's my non-answer answer, if that makes sense to us.
I mean, it makes perfect sense. Like you said, there are programs out there that go when it's below sixes. But yeah, six is where kind of like the baseline and where you want to start when it comes to a credit score. Now, kind of let the folks know, because there are, strategies to build credit that we employ with all of our clients every day. What are some of the strategies that you would suggest to somebody who's looking to build their credit in today's market when it comes to being more competitive when it comes to getting a home? What are some of the strategies you have for them?
If we're simply talking about building, I always think about those clients that either have not yet established credit, or they're still pretty new to the credit world, right? One of the biggest strategies that I offer, to my clients, it probably goes to what you've already touched on, which is that 30% rule. If you have credit cards and you're over 30% usage, you are getting negatively impacted on your credit score. So for a building aspect, someone who's early in the credit world, so to speak, having a credit card that's over 50% or sometimes maxed out is going to be tough to build around. So as you're building that credit, keep in mind that you're almost like a newborn baby when it comes to credit at, 17, 18 years old. Keep an eye on those limits and balances. All right. Make sure that you establish early. Establishing early, I'm probably speaking to the generation before you. We have savvy clients who as soon as their minor children are capable of being authorized users, like legally, they're making their minor children authorized users on accounts in good standing. That's a huge one, guys. If I'm a dad, which I am, and my son is just turned 13, I could add him as authorized user for some creditors as early as 14. I don't want to add him to a credit card that's not in good standing because then I'm only putting him behind. You see many times where someone has an older credit card than they really should. I pulled a client's credit a couple of weeks ago that's 23 years old, and he had a credit line that was attributed to his credit score that was older than him because his parents had him as an authorized user on a card in good standing. That's a great way to build strategies. Let's just say you're like, I would say most people, myself, probably Tez as well, like when we got out of high school, like there was nobody that was adding us to authorized user accounts when we were 16 years old, telling us how to do this stuff. And, our parents were doing good to take care of their own credit, and more power to them because that's honestly the way that it was for more people than the other way around. Use those secured credit cards that you have that banking relationship with. If you belong to a credit union, a local bank, things like that, go in, tell them you are trying to build your credit, see what opportunities they have. Some of them have, secured credit cards that are essentially like a prepaid debit card. You're setting aside a certain amount of money in an emergency fund, and then they're allowing you to use that as a credit card and essentially helping you build your credit. Those are probably the biggest building strategies that I offer my clients. Unfortunately, one of the best building strategies there is just time. Tez mentioned like the length of time that you have credit. Um, Responsibly using a credit card at 18 is not always the easiest thing to do, but you'll see those people who did go out and responsibly use a credit card starting at 18 when they're turning 21, 22, getting out of college or trade school or getting that first, salary paid job. Those people are going to be in a better spot. Those are my top building strategies. Tez, is there anything that maybe you offer your people that I didn't hit there?
The only thing, and I was thinking about that as you were talking, the only thing that I would probably suggest is self-reporting accounts, right? So if there are things that, like your cell phone bill, you can self-report any energy bills that you're paying in places that you rent, even your rent currently right now, if it's self-reporting or if you have a property management company that is going to report it to your credit, that also helps build it as well. But other than that, the strategies that you said, along with that self-reporting, are probably some of the best strategies. And as you said, ladies and gentlemen, it just takes time. Um, what is it? You can destroy it faster than you can build it. Is what I always say when it comes to credit. So when you're building it, it's just going to take time. But that kind of tees me up for the next part when it comes to credit. Let's say somebody has destroyed their credit, Travis, and they're actually looking to repair their credit. What are some of the things that you tell your clients in regards to repair to help them get out of that hole that they think is insurmountable that they've dug themselves into?
Yeah, repair. It takes 10 years to build something, and it takes 10 days to destroy it, right? One terribly bad late payment is all we're all kind of one bad paycheck away, right? Um, repair strategies, they vary. Now, one of the first things that I'll tell you is that there are many reputable places that do credit repair. Okay, so this is not a shot at any of them. However, there are more not reputable places that do credit repair than there are reputable places. Now, um, one of the things that we typically see, it's kind of been a new wave in the last, I would say, 4 to 6 years of these kind of like do it yourself. I mean, we have TikTokers, we have, almost everybody knows a credit repair person. Be leery of their methods. Okay, anytime that we advise on credit, we can send you to someone who can do that in the correct way. That's my, I guess you can say, like a buyer beware statement of this whole section. But when it comes to repair, I typically advise my clients to first and foremost get their current credit in order, right? Balance pay downs, trying to get those accounts under those 30% limits, right? That's going to be huge. The second one is derogatory items and how do we handle that? Now, the first one is I would say like the gold standard. It's the hope and the dream, and that's a deletion. Now, if I have a debt, many times you'll see these are medical when you have the most success, and they're also the most common. Because I think everybody can kind of relate to, like, I had a doctor's bill that just kind of didn't make it to me, or I had a bad time medically, and it happens to everyone, right? Having those items deleted typically requires at least a partial payment. Now, what you'll want to do is you'll want to contact the creditor directly. Sometimes this is the creditor still, sometimes it's a collection agency. You'll ask them if they offer any pay to delete opportunities. Specifically, a deletion will make it as if that thing never existed and it will be erased from your past, right? Deletions are the gold standard, right? If we're able to get a pay to delete, I always recommend that you get a verbal on a recorded line, and even better, a written verification of the deletion. If I'm calling to have a debt paid to delete, I expect and I request a letter directly from that creditor, and they are supposed to alert every bureau in which they report to. If they do not, that's why you have them send your letter. Okay, so a deletion is the gold standard, right? Many times disputes can be helpful. Now, I typically advise my clients broad brush disputing everything on your credit is a terrible idea. If it's genuinely something that you have done wrong, or if it's genuinely your debt, a dispute is essentially telling the bureau that you believe that you are not required to pay that debt. Now, if someone else held that debt, let's just say something was open illegally, I do have a leg to stand on there. Now, most of the time, if it's just like, hey, I didn't feel like paying that and things got away from me, I'm just gonna dispute. You will lose that process and you will lose a ton of time. Okay. Keep in mind that a dispute process is a legal process. There's limitations, right? Many times this is why people hire credit repair companies, because they handle that process for you. There are going to be certain documents that you have to provide, certain documents that the creditor has to provide. There's time limits on these. Sometimes you have 30 days to respond. Sometimes you have 45 days to respond. The back and forth is essentially a chess match with that creditor, right? And more often than not, those creditors have better record keeping processes than we do as individuals. So that's typically why we recommend disputes only in transactions where there's a significant chance of having them removed, or if there's just flat out an error there. Keep in mind that those bureaus are there to protect you and to help you as well. right? That's a huge business right now, credit repair. Most of the things that they'll do for you are free resources, or at the very least, inexpensive resources. Um, One of the things that we see a lot is someone who's going through the repair process and they haven't yet completed them. Okay. Um, People that are in repair processes typically start to work on getting self reporting things to kind of boost that score up, and those are great. But keep in mind that there's going to be underwriting guidelines specifically for mortgages that are going to limit the number of disputes you may have on the account. Sometimes you can't have any disputes. I've had clients who we've accessed their credit and they've disputed 5, 10, 15 items. We access their credit and their credit score appears to be in the high 700s. The underwriter requires that we remove those disputes. And now we're back down in the 500s. A dispute is a band aid. Okay. Everything looks fine on the surface, but many times to get a mortgage, the underwriters require that we take the band aid off. Now, that wound could be healed underneath of that band-aid, or that wound could be infected. You could actually make your situation worse. And I don't want to make this seem like it's harder than it really is, and I don't want to discourage anyone. But that's why it's very important to speak to loan officers about your credit in depth before you begin any of these processes. Tez, what are you seeing out there as far as like repair strategies? Is there anything that maybe I didn't dive deep enough on, or is there something out there that I just completely missed? I know that you're our resident credit guru here at Affordable Mortgage Partners, so tell me more.
So it's funny that you say that, because the only thing I was going to add, and apparently you must have been paying attention to when I tell you things, because you pretty much hit the nail on the head. The only thing I will say is, folks, when it comes to the deletion process, some of the best successes that you can have is not just pay and delete. The key word is settle, because 90% of the times, if it's an older debt, it has gone to a collection agency. And what happens with the collection agency is the original debtor has already written the debt off. It's long gone off their books. And the collection agency has collected it at pennies on the dollar. So what happens is, they're not going to tell you the price that they paid for it. They're just going to tell you the price that you owe the original debtor. And that's how they make money. So when it comes to a debt that's in a collection agency, settling and deleting. So keyword there, the deletion part is still what is in line with what Travis said, but settling. So I remember, true story, I had a lady, she had about, I want to say $7,000, and I can't remember what debt it was, but she got it settled for $1,700. That's huge. And I had a former colleague of mine. She worked at a collection agency, and she said at certain points on certain bills, they go as low as 5% of the original balance. So when it comes to collections specifically, don't be scared of the amount that you owe. Just build up to that amount. And then that way, when you call them, you have the power, because you actually are reaching out to them and paying it, but you want to settle it. So you can bargain with them as far as the total that you pay. And like I said, I've had clients that have paid less than 50% of what they actually owe, which is a relief to most of them, because now that's a burden that's off of them. And it instantly shoots up the credit score. Oh, the one thing I will also add, if you already had a collection that you have paid and it's still showing a zero balance, it's still going to hurt you negatively. So try your best, if you have that documentation that Travis did talk about, to contact the bureaus to get it removed. Because with that documentation, you can request from whatever bureau that is showing on that it be removed. And then lastly, when starting your credit, I know Travis said talk to your loan officer about your credit, but ladies and gentlemen, I will implore, know your credit before you go to apply for a mortgage or for any kind of debt. This is your credit. This is your life. You should know what's on your credit report before a loan officer tells you what's on your credit report. So that is something, like I said, you can, every year you're obligated to a free credit report, freecreditreport.com. I know the bureaus will offer you their credit report. I know Experian, you can log on and get your credit report within a matter of minutes by filling out a few pieces of information, at Experian.com. So I implore you, ladies and gentlemen, know what's on your credit before you talk to anybody and get blindsided by, oh, well, I didn't know that was there. I have too many nightmare stories when folks are like, well, I didn't know that was what was weighing my credit down until they actually had a conversation with me. So those are kind of the only things I would add in terms of credit repair, for folks out there looking to rebuild and actually start off building their credit. So anything else that I missed, Travis?
So Tez, actually have a question, man. That's the one of the things that I've been doing as a loan officer for a long time is, we're always weary of that settlement piece, right?
Mhm.
So, so if someone's offered a settlement, is just that settlement enough to imply a deletion? Because obviously we always talk about, like, you don't want to just go pay off these collections with no promise of deletion. And I've had people that have settled debts for, pennies on the dollar, like you mentioned, but then they don't get that deleted by that creditor. And then what that does is that pulls that older collection, like let's just say it's a collection from, 2019. Now, instead of it being 4 years old and on its way to naturally falling off, it's essentially opened again, right? Like we cut the wound open, and so those settlements that you're receiving, those are also settle and deletes. Is that what I'm understanding?
So the key term is the phrase settle and delete. You only agree to settle it if you agree to delete it. And that's why getting it on a recorded line and getting the documentation saying that has been a settled account is so important. So it's the term settle and delete. So then that way they know in their ear, hey, and you can always go back. I always tell my clients, write down who you talk to, when you talk to them, what day you talk to them. So that way they can always go back to their records and say, hey, I talked to John Doe on May the 24th at noon. And then that way they know, okay, we did say that we were going to do that, and we did promise that we would delete it and they would take it off. There are some, though, that will not delete it. And with that, that's why the documentation is so important, because then you can go to the bureaus and request that it be deleted, because in essence, it's inaccurate. Like, I've settled this debt and it's still showing this is inaccurate. So that's why it's a twofold thing, ladies and gentlemen. You request it upon payment, but then also requesting the documentation so you have something to provide should they not delete it. In that way, you can say that it is an error because it's something that you no longer have on that you have to worry about. So great question, Travis. The key phrase, ladies and gentlemen, settle and delete when it comes to those type of collections. So any other
Tez,
questions, my brother?
yeah, this is awesome. So like this is like ask the professional. I feel so low on the totem pole right now, bro. Um, so we have come across clients where I think obviously, I think you and I and probably every loan officer out there is seeing certain names on credit reports that you just kind of cringe, right?
Mm-hmm.
Um, let's just say I forgot to send back my uh, cable television box for a company that shall remain nameless. And they've placed a collection on my account. And I call over and over and over again. Because, like Ted says, I've had people that have had success getting things removed at the end of the month. Imagine that, trying to hit those quotas. But let's just say I contact that company and they say, we don't delete, we don't settle, we don't do. What's your advice there, Tez?
Well, ladies and gentlemen, when it comes to stuff like that, sometimes I just have to I bite the bullet. I want to tell a true story with me. I lived in Florida. This is actually what held up my mortgage license when we first started out, Travis. So I lived in
Wow.
Florida, and the company that I'm gonna say, I want to guess the name rhymes with bombast. So
Oh, okay,
they
yeah.
they had said that I had kept a cable box when I know for a fact I returned a cable box. And at which point it baffled me, because I'm like, what am I gonna do with a cable box? And I lived in a completely different state. So when it came to the actual total amount, I mean, it was relatively low. It was like $100. It wasn't expensive, but I knew for the greater purpose of it, I just had to go ahead and get rid of it because that was holding up my license. Like I wouldn't be here today if I didn't pay that silly $100. So if it's something that is holding you up in the process, that is going to stop you, my suggestion is if it's something that will move you forward, just go ahead and get it done with. Like you said, just ripping the Band-Aid off, just go ahead and knocking it out. I know that sounds not like what you want to hear, ladies and gentlemen, but sometimes it's easier to get that stuff out of your hair. So that way you can go forward in terms of, especially with your credit, because your credit almost is more important than your actual name when it comes to like things that we need. Like there's so many things in life that are based on credit. Heck, your auto insurance, your homeowners insurance, now is based on your credit. You renting is based on your credit. So are you going to hold back your life over a couple of $100 is what I usually tell folks. And when you put it in perspective like that, most folks, it clicks. But if it's something like, but we go back, if it's something that you really truly isn't yours and you have proof, the dispute is what that's there for. And I'm glad that you touched bases on it, because so many people dispute things that are just like, well, I just don't feel like paying it. That's not valid. That's such a bad way to look at it. And it's the wrong way to go about it. There are ways, like I said, settling and deleting an old debt that is there, it's yours, but you just to move on, ladies and gentlemen. So, I mean, that's the I guess that's the tough love Tez when it comes to certain things like that, because like I said, if I had not paid that $100, I wouldn't be a loan officer today. So that's my suggestion to folks when it comes to things like that, that are easily taken care of. So any other questions, my friend?
No, I think you
Knock that one out.
great
All
job.
right, folks. Well, I think that'll wrap up our time here today. As always, if you found this information to be useful, please hit that like button. Please hit that subscribe button, as well as the bell notification, so you're always up to date every time we drop a new video. And speaking on behalf of myself, as well as Trav, we're your favorite LOs. Until next time, see ya.